Welcome, Benzinga Nation. Today we've got another great conversation with Rob Marrocco, who is the Vice President and Global Head of ETF Listings. Rob, welcome to the show.
Nate, thanks for having me.
Absolutely. There's so many great things to talk about here, but for the folks that might not be familiar, give us a quick, brief overview of Cboe Global Markets and its listings business as well.
Absolutely. So most folks know Cboe as the innovator for derivative products and really the listed options market dating back to 1973. Today, the organization really is at its core one of the largest global exchange operators. We operate 26 markets around the globe. Very specifically with listings and what does that translate to? As you mentioned, I look after our ETF business. We have a network of 5 different exchanges globally that we're working with global asset managers and local issuers of ETFs and listing their products on our markets, on our equity exchanges, on our stock exchanges, essentially. Today, we're listing ETFs in the US, Canada, the UK, and Europe, as well as Australia. So we just ticked over 1,000 ETFs this year. Very specifically in the US, we are actually the second largest exchange by number of primary ETF listings, so the listings that are on our exchange. We've done that really all over the last 9 years and becoming really focused on being best in class in working together to service ETFs and make sure that the trading of those ETFs on our exchanges is robust and liquid.
So there's obviously so many different, things that you're doing in the ETF space, especially when it comes to option strategies. I want to talk about the defined outcome ETFs. Tell me a little bit more about the rise of that and the popularity it's gaining.
This has been a real key focus, not only for us, but much of the industry, because typically these types of strategies were not available. They were not available in an ETF wrapper, but they were typically over-the-counter products, not necessarily always readily accessible, and quite frankly, only available to certain types of investors that had minimums and a little bit more exclusivity, if you will. What the ETF has done for these target outcome, defined outcome, buffer ETFs, has really, the ETF wrapper is democratized and allowed for just greater access. Very specifically, what, in a nutshell, these products are, is a very simple options trade underneath that's either using a broad-based index or on top of an existing ETF, like SPY, for instance. They're implementing a options trade that you're giving up a little bit on the potential upside, but you're having a buffered or a defined outcome as it relates to protection on the first 5, 10, 15, 30% of the downside. So very similar to what would typically look like a structured product, but now wrapped up in an ETF. Very simple. Typically, it's using the ETF is implementing flex options inside of the portfolio in order to allow for that outcome during that period. And so it's a very clean way of putting on a pretty sophisticated strategy at a very affordable price. So that's ultimately why in my personal opinion, these products have been so successful over the last 3 to 5 years as we've seen them come. When these products originally came, it was from a few core issuers. Now we clearly see other asset managers adding these types of products to their shelves. It's a clear indication that these products not only, I believe, are here to stay, but the continued growth in the trading volume and in the assets that are going into these products.
Yeah, I remember when I started learning options. Then there was, all right, how do I take it to the next level? And you get involved with ETFs, and you've got iron condors and butterflies, and I'm like, how in the world, like what? So there's a lot of great ways to adjust to your strategies that the individual may have at home. You mentioned the issuers, and I want to see how Cboe, kind of give you a sneak peek behind the scenes of how Cboe works with issuers to kind of develop these options-based ETFs.
Absolutely. So first and foremost, we have the derivative experts in-house, given just, again, our legacy, our core competency. So we have a significant depth of bench. As issuers are going to the drawing board, working through the product development, how is Cboe able to aid in some of that product development work with some thoughts? Are there opportunities to enhance the underlying contracts that are going to be used? So, for instance, in case in point with the defined outcome ETFs, we created new order types for the option so that the portfolio manager is able to better manage the ETF, have more flexibility when managing the ETF. So we're working with them on a product development perspective. In many cases, also, we are able to create indices, create an index for the ETF to track. And so our index group and our data group work very closely as part of that product development, product consultation. On the actual strategy, great, it's baked. We now need to list. Well, how are we going to list it? Do we have the ability to list it under our rules, or do we need to go seek permission from the regulator in the US, the SEC, other regulatory bodies around the globe? So it's making sure that we have the regulatory piece and the framework ironed out. And then ultimately, what is that once it lists? How do we work together with our issuer and the market maker and the market participants of our exchange to make sure, number one, a fair and orderly market, but two, that there is deep liquidity, so that as advisors, as retail folks want to access the product, they're going to have a good experience when entering or exiting a position in the ETF.
Yeah, the liquidity aspect of it is huge, especially so that the trader, the individual, can get in and out of positions without kind of sacrificing on the spread, if you will. As a retail trader myself, I've seen the change in the landscape in the past 3 years, especially since COVID and the rise after. But I want to get insights from you, from Cboe. How has the trading landscape kind of changed in the past 3 years?
Look, we all went through the last almost 4 years now since COVID, and everyone saw the uptick in retail trading. And retail is still very well and alive from a trading perspective. The best example I could point to has been this year. Earlier in January in the U.S., we received regulatory approval and the ability to list spot Bitcoin ETFs. And so we listed these products. We listed 6 out of the 11 that came to market. And the trading volume has just been absolutely tremendous, absolutely tremendous. Over the list, as we're approaching almost that 6-month point, these have been some of the most liquid ETFs in not only in the marketplace, but in terms of a new launch, just very, very atypical. And when we look at that trading volume and we look at what size of those trades, small trades, 1, 2, 3, a lot of odd lot trading, right? And clearly indication it is a lot of retail activity accessing those ETFs. And I think, again, it's a testament to that retail could go directly and buy, and many do, digital assets, digital coins. But the ability, once a product is wrapped in an ETF, and the accessibility and the ease, and now it's in my brokerage account with the rest of my stock and ETF portfolio, it's a testament to the access that the wrapper affords.
Now, if you ever see a small lot being traded, it's probably me. But speaking of which, you've got retail, right? That we've been kind of having the point focus of this conversation. What impacts have they had on the industry? Whether it's, hey, we've had to kind of pivot to certain things to make sure that we provided quality offerings to the retail side. How have they impacted the industry?
I think the impacts is really the democratization, to be honest, and defined outcome is a perfect example of that. Where again, that type of strategy, if you were able to access it, again, retail investors typically wouldn't have the ability to find a product like that they could easily be able to put an exposure on at a competitive price point in a transparent and fair market. That wrapper, just it's the impact has been just greater access, greater choice, to really some spectacular products that are out there. And so that, I think, the impact has been really not so much on what is the industry needed to do to accommodate. Clearly, there is capacity. Clearly, our market structure, especially in the U.S., extremely robust. I think it's more around the impact to being for retail to access strategies that necessarily were harder for them to get to, and at the same price point.
All right. Well, hey, I appreciate your time here today. It's always fun to talk with Cboe about ETFs, options. Always a great time.
Thanks so much for the conversation.
You got it. That is Rob Marrocco, who is the Vice President and Global Head of ETF Listings.